Hello and welcome back. We hope you had a nice summer. The fall is usually quite a volatile period during the year, and we believe this year is going to be no exception. We believe that there is a contagion risk between what is happening now in emerging markets and the more developed markets in Europe and possibly in the US. We will first start our interview today looking at currencies and the Euro-US dollar weekly chart on our FinGraphs platform. It usually gives a perspective over the next 2 to 4 quarters. Following the rebound between 2016 and 2018, the Euro-US dollar is back in a downtrend. The targets are quite scary over the next few quarters, possibly towards 104 and possibly even below parity. The risk index never really made it into the overbought, but it was just a correction and it is now already starting to roll over again. So we are quite negative over the medium term on Euro-US dollar. Looking at the daily graph or the perspective over the next few months, we are now still in a downtrend, and that downtrend could lead us down into 114, 110 range. The risk index was quite oversold mid-August. It has had a nice bounce, but this bounce comes in the context of a downtrend which is still prevailing. So we believe that sooner or later it will resume down, possibly at some point between early September and late September, probably down into November. Looking at the hourly graph, the bounce is still effective at the moment. It could still lead us up over the next couple of weeks into the 117, 119 range, and the risk index could still move up into the overbought zone. Now looking at all three charts together, we are now in a downtrend with quite a bit of risk over the long term. We're in a downtrend with still some risk over the medium term, and the uptrend on the hourly probably only has about 2 or 3 figures of potential. We believe that it is a negative risk reward and that the risk of playing that move is probably quite difficult to manage given the prevailing downtrends on the daily and the weekly. We now look at other euro crosses, and first at euro Swiss, which also saw a strong bounce between 2015 and early 2017. We believe that this bounce came into an overbought situation and that it has started to reverse down. It is not yet a downtrend, but we believe it could soon become one. On the daily, we are now in a downtrend. This downtrend could lead us below 110 and possibly into the 105 zone. It is currently oversold, so could see a slight bounce during September, but we believe that we should really respect this prevailing downtrend which is now in place. On the hourly, we also started a downtrend, are quite oversold. We would expect a slight bounce over the next few days, perhaps a couple of weeks, but again, we believe that the downtrend on the daily is going to prevail. Looking at euro-yen, a slightly stronger position, but pretty much the same picture. We are now back into the downtrend on the weekly graph, and we also believe the risk index is starting to roll down over again. On the daily, the downtrend is more affirmed, and you can see that our targets to the downside are leading us between 126 and 122 over the next few months. We're also quite oversold in August, and hence the strong bounce here over the last few weeks. The bounce doesn't seem quite over yet and could lead us back between 131 and 132. But that 131, 132 compares to a downside risk over the next few months between 126 and 122. So here again, the risk reward is probably at a disadvantage if you're considering buying opportunities. Now looking at equities, the US market is still heading up and is still in an uptrend, yet we believe it is an exhausted uptrend. It's reached our impulsive targets to the upside. Our envelopes are touching each other and our risk index has come into overbought. Such situations could trigger several quarters of correction. If we now look at the daily, we're still moving up, but we're slowly getting overbought too. There's a bit more potential here, probably 4 to 5% to the upside, somewhere between 29.40 and 30.60. That said, the risk of a downside correction could probably lead us back to the envelope here below 2700. So also here, we believe that although there's a bit more potential to the upside, the risk reward is at best neutral. Finally, on the hourly graph, we are still heading up, possibly over the next few weeks, with a bit more potential, but also here we're quite close to overbought. To summarize the situation, 3 charts which are still uptrending, but are all close to the overbought zone and are all pretty much exhausted in terms of price potential. Hence, we believe that from here towards year end, the risk reward on the S&P 500 is probably not advantageous anymore. Looking at weaker markets and the emerging markets iShares ETF, we can see that the downtrend already started in January and that it has been quite strong. It could find support at some point towards year end around 38. It's currently around 43, so another 10% of downside correction. At the moment, the daily was quite overbought in August. It's trying to bounce, but this bounce is proving quite weak. And there's still some downside potential over the next few months. Also here on the hourly, we've seen a slight bounce, but it's having problems to follow through. So also here, a bit of a dead cat bounce into September, and then a resumed downtrend situation for emerging markets into probably mid-late November. Now looking at Europe, it has also started to turn down. The risk to the downside is somewhere between the low 3,000s down to 2950 if it's only a correction. And you can see that the risk index is starting to roll over too. Considering the daily, we're now in a downtrend, and this downtrend was slightly oversold mid-August, has had a weak bounce, but is having problems seeing follow-through on that bounce. And we believe that the risk to the downside is also somewhere between 3,200 and 3,100. So quite a bit of risk to the downside over the next few months. Finally, the hourly has tried to bounce since mid-August, has seen quite a strong retest over the last week, is almost oversold, so could see another bit of upside correction, but in general we expect it to roll over during September. Looking at all 3 charts together, we have 3 bears here. We have targets towards the 3,000 level corrective on the weekly, targets slightly above towards November on the daily, and on the hourly we're still in quite a strong downtrend. So in general, if we consider equity markets, it's only the US which is still holding world markets, and we believe that emerging markets and Europe should continue this slide and gradually bring some contagion to the rest of the world. Thank you very much and have a nice week.